War and Gold. A 500-year history of empires, adventures, and debt. By Kwasi Kwarteng. This is a book summary. Money, war, and power. The ultimate trio that has shaped our world for the last 5 centuries. From the ruthless Spanish conquistadors to the financial wizards of Wall Street, the story of money is a story of empires rising and falling, of battles fought not just with swords and guns but with gold and debt. It's a tale where fortunes were made and lost, where entire nations were brought to their knees not by armies, but by the weight of their own debts. This is the epic saga told in Kwasi Kwarteng's book, War and Gold, a 500-year history of empires, adventures, and debt. It all started in the 16th century, when Spanish ships, heavy with Inca gold and Aztec silver, crossed the Atlantic, pouring wealth into the coffers of the Spanish crown. But this glittering fortune was no blessing, it was a curse. The very gold that was meant to cement Spain's dominance unleashed chaos instead. It fueled endless wars across Europe, sparked inflation that crippled the Spanish economy, and left the empire bankrupt despite its mountains of silver. The irony was bitter. The more gold they had, the poorer they became. This was the first lesson in the story of money. Wealth alone is never enough. It's what you do with it that counts. Fast forward to the battlefields of 17th and 18th century Europe, where England and France were locked in a struggle for supremacy. In England, war was a catalyst for financial innovation. Desperate for funds, the government created the Bank of England, a revolutionary institution that transformed war debt into a national investment. Across the Channel, France, drowning in debt from Louis XIV's extravagant wars, turned to a man who seemed more like a gambler than a banker, John Law. His bold experiment with paper money and the infamous Mississippi bubble would show just how explosive debt could be. When the bubble burst, it didn't just wipe out fortunes, it shattered France's trust in paper money for generations. As the centuries rolled on, gold's grip on the world tightened. Empires rose and fell on the strength of their gold reserves. The British Empire, at its peak, was held together by the glittering promise of the gold standard. It was gold that backed the pound sterling, the world's dominant currency, turning the city of London into the beating heart of global finance. But as the First World War erupted in 1914, even the gold standard couldn't hold back the tides of chaos. Governments, desperate to fund their war machines, suspended gold payments, borrowing and printing money instead. The result? Hyperinflation, economic collapse, and a world that would never look at money the same way again. And then came the 20th century, a time when the world moved from gold to paper, from the fixed certainty of gold-backed currencies to the wild seas of floating exchange rates. The United States emerged as the new financial powerhouse, its dollar pegged to gold, while the rest of the world's currencies were tied to the dollar. This new order, forged at Bretton Woods, was meant to bring stability. But in 1971, when President Nixon closed the gold window, severing the dollar's link to gold, the era of paper money truly began. It was a move that unleashed a torrent of debt, paving the way for the financial crises that would come to define the modern age. So, what does this all mean for us today? Are we destined to repeat the cycles of war and debt, or can we learn from the past? As Kwarteng shows, understanding the history of money isn't just about looking back, it's about understanding the forces that still shape our world. Our story begins in the 16th century, when Spanish conquistadors, driven by an insatiable hunger for wealth, set sail across uncharted waters and stumbled upon a world glittering with gold and silver. Led by men like Hernán Cortés and Francisco Pizarro, these adventurers didn't just conquer, they plundered. They dismantled the mighty empires of the Aztecs and the Incas, stripping temples and palaces of their golden treasures, and sent ship after ship back to Spain, their hulls heavy with riches. To the Spanish crown, this seemed like divine providence, a golden tide that could finance their dreams of empire and cement their place as the dominant power in Europe. But here's the twist. Instead of securing Spain's power, this tidal wave of wealth became a curse. As Kwasi Kwarteng reveals in War and Gold, This flood of gold and silver unleashed a financial disaster that Spain never saw coming. You see, while Spain's ports overflowed with treasure, its rulers failed to invest this wealth wisely. Instead of building industries or strengthening the economy, they spent it on endless wars, battles against the Ottoman Turks, conflicts with France, and campaigns to crush Protestant rebellions in the Netherlands. The result was predictable. The more gold they had, the more they spent, and the more they needed. The irony was brutal. The very gold that was supposed to secure Spain's power set off a chain reaction of chaos. As the Spanish crown spent lavishly, prices soared. Inflation swept through Spain like wildfire, devaluing money so quickly that a bag of wheat that once cost a handful of coins soon demanded a fortune. Meanwhile, the endless wars drained Spain's coffers faster than the silver could flow in. By the late 16th century, Spain was forced to declare bankruptcy 4 times. Yes, 4 times! How could an empire, rich with the treasures of the New World, be so utterly broke? The answer lay in a simple truth. Easy money leads to easy spending. Spain's rulers, awash in gold, never bothered to build an economy that could sustain itself. Farms lay abandoned, craftsmen left their trades, and Spanish industries withered. Worse still, the rivers of silver pouring out of the Americas didn't just fuel Spain's wars, they paid for its enemies too. The silver that flooded into Seville quickly made its way into the pockets of Dutch and English merchants, who used it to finance rebellions against Spain itself. And then there was the impact on Europe. The sheer volume of gold and silver pouring into the continent sparked what historians now call the price revolution, a century-long surge of inflation that reshaped economies and deepened the divide between rich and poor. In Paris and London, merchants thrived, but in Spain, where industries were few and the nobility scorned trade as beneath them, the middle class was strangled before it could even take root. In a bitter twist of fate, the gold that was supposed to secure Spain's future instead paved the way for its decline. So the lesson here, wealth without wisdom is a dangerous thing. And in the story of money, sometimes the greatest treasures are the ones that can cost you everything. As Kwarteng shows us, this was just the beginning of a 500-year dance between empires, adventures, and debt, a story that continues to echo through the centuries. Fast forward to the 17th and 18th centuries. The battlefield had shifted, but the stakes were just as high. England and France, 2 nations locked in a bitter rivalry for control of Europe and the riches of the New World. Their struggle wasn't just fought with muskets and cannons, but with ledgers and loans. To fund their endless wars, both nations pioneered new financial tricks that would forever change the world of money. In England, the coffers were empty, drained by decades of conflict, and the crown was desperate for cash. Enter the Bank of England, a revolutionary institution born out of wartime necessity. But this wasn't just a bank. It was a brilliant financial weapon. The bank allowed the government to transform war debt into a national investment opportunity, selling bonds to the public to fund its armies and fleets. For the first time, ordinary citizens could invest in the fate of the nation, earning interest in return. War wasn't just a matter for kings and generals anymore, it was a business. As Kwasi Kwarteng reveals in War and Gold, this was the birth of modern finance. Meanwhile, across the English Channel, France was trapped in a financial nightmare of its own making. That's when a Scottish gambler named John Law came into the picture. Tall, charming, and known for his luck at the card tables, Law was an unlikely savior. But he had a bold idea: paper money. At the time, this was a radical notion. For centuries, money had meant gold and silver, something solid you could hold in your hand. Law argued that paper money, backed by faith in the government, could expand the economy and erase France's debt. The regent, desperate for solutions, gave Law his chance. In 1716, Law founded the Banque Générale, which began issuing paper currency. Then came the real gamble, the Mississippi Company. Law convinced the French court to consolidate its massive debt into shares of this new venture. promising vast riches from France's American territories. Lands most had only heard of in sailors' tales. Investors rushed to buy shares, dreaming of gold mines and exotic fortunes. The price of stocks soared tenfold in a matter of months. Paris was gripped by a fever. Aristocrats, merchants, even servants sold everything they owned to buy in. The city's squares buzzed with the chatter of investors and the clink of coins, while law was hailed as a financial genius, second only to the king himself. But behind the glittering promises lay a dark truth. The Mississippi Company was a castle built on sand. The territories in America were wild and undeveloped, the riches mostly myths. The paper money issued by Law's bank had no real backing beyond faith and speculation. And when that faith wavered, the entire system collapsed. In 1720, the Mississippi bubble burst, wiping out fortunes overnight. The streets of Paris turned from feverish excitement to riots and despair. Investors, once giddy with dreams of gold, now lined up outside the bank, desperate to exchange their worthless paper for silver and gold. But it was too late. The bankruptcies swept through every level of society, from shopkeepers to princes. The fallout was catastrophic. John Law, once the toast of Paris, fled the city disguised as a woman to escape the mobs. His experiment with paper money left France's economy in ruins and its people bitterly mistrustful of anything but solid gold and silver for generations. As Kwasi Kwarteng explains, this was a lesson in the dangers of financial alchemy, of trying to conjure wealth from thin air. Meanwhile, in London, the Bank of England's more cautious approach paid off. Its bonds became the foundation of British imperial power, funding wars, colonies, and a global trade network that stretched from the Caribbean to India. In the battle of financial innovation, England had won, and France was left picking up the pieces. But the story doesn't end there. The lessons of the Mississippi bubble would echo through history, warning of the dangers of debt and speculation, a warning that, as history has shown, we've been all too quick to forget. Then came the 20th century, a time of unimaginable conflict and upheaval. 2 world wars shattered the old financial order, leaving Europe's empires bankrupt and bleeding. The gold standard, which for decades had been the bedrock of global finance, was abandoned in the chaos. Governments, desperate to fund their war machines, turned to an old trick, printing money. But this time, the stakes were higher than ever. As Kwasi Kwarteng reveals in War and Gold, this was a century where the fate of nations would be written not just in blood, but in banknotes. In Germany, the aftermath of World War I was a financial nightmare. Saddled with crippling war reparations and devastated by defeat, the Weimar Republic faced an impossible choice: pay its debts or face economic collapse. In the end, they chose to print money, vast quantities of it. The result was a hyperinflation so extreme it defied belief. In 1923, the German mark became so worthless that people needed wheelbarrows full of cash just to buy a loaf of bread. The stories from that time sound like fiction. Workers demanding to be paid twice a day so they could rush to the market before prices doubled again. Children using banknotes as building blocks. Families burning piles of cash to stay warm because it was cheaper than firewood. Meanwhile, across the Atlantic, a different kind of financial drama was unfolding. The United States, untouched by the devastation of European battlefields, had emerged from World War I as the world's largest creditor. Its vaults overflowed with gold, and the dollar began to eclipse the British pound as the new king of currencies. But the real turning point came after World War II, as the world lay in ruins once again. In 1944, representatives from 44 allied nations gathered at a secluded resort in New Hampshire to forge a new financial order, the Bretton Woods Agreement. This was no ordinary conference. It was a battle of economic giants, with Britain's John Maynard Keynes squaring off against America's Harry Dexter White. The stakes? The future of global finance. The outcome? A world where the dollar, backed by gold, would anchor the entire international monetary system. Every other currency was pegged to the dollar. It was about power. The Bretton Woods Agreement established the International Monetary Fund, IMF, and the World Bank, institutions designed to prevent future financial meltdowns and ensure American influence over the global economy. It was a masterstroke of financial diplomacy that ensured the US would not only rebuild the shattered world, but would also dominate it. As Kwarteng highlights, this was the moment the dollar became the world's reserve currency, the coin of the realm for trade, oil, and debt. But even as the ink dried on the Bretton Woods Agreement, cracks were already forming. The cost of rebuilding Europe and the escalating Cold War soon pushed America's finances to the limit. By the 1960s, the US was hemorrhaging gold to back its growing debts, and nations began to doubt whether America could keep its promise to exchange dollars for gold. Then, in 1971, President Richard Nixon shocked the world by closing the gold window, severing the dollar's tie to gold. It was a financial earthquake that sent shockwaves through global markets. For the first time in centuries, money had no anchor. It was whatever government said it was. This was the dawn of a new era, an age of fiat money, floating exchange rates, and a world where debt would soar to unimaginable heights. The financial stability promised at Bretton Woods dissolved into decades of inflation, oil crises, and market crashes. Yet, despite everything, the dollar held its crown. The greenback, backed by nothing more than faith and the might of the US military, remained the world's reserve currency. By cutting the dollar's tie to gold, Nixon unleashed a new era of uncertainty, an age of floating currencies, speculation, and financial crises. This was the moment when money became truly untethered, free to rise and fall at the whim of markets and central bankers. The world was unprepared for what came next. With currencies no longer tied to gold, exchange rates began to swing wildly. Investors scrambled to protect their fortunes, and a new breed of financial speculator was born, one that thrived on volatility. Then came the oil shocks of the 1970s, when OPEC, flexing its newfound power, turned off the taps. The price of oil quadrupled almost overnight, plunging Western economies into recession. Inflation soared, unemployment followed, and the specter of stagflation, stagnant growth combined with rising prices, haunted policymakers. Freed from the constraints of the gold standard, American banks and financial institutions began to expand at an unprecedented pace. The 1980s became an era of leveraged buyouts, hostile takeovers, and a new breed of corporate raiders. Financial deregulation, championed by President Ronald Reagan and British Prime Minister Margaret Thatcher, turned Wall Street into the beating heart of a new global financial order. Greed was good, and debt was no longer something to be feared. It was a tool, a weapon to be wielded in the pursuit of profit. Meanwhile, in Europe, a different kind of financial experiment was underway. For decades, European leaders had dreamed of unifying the continent, not just politically, but economically. In 1999, that dream became reality with the birth of the euro, a single currency for a fractured continent. But beneath the glossy promises of prosperity, there were cracks in the foundation. The euro tied together nations with vastly different economies, debts, and political systems without giving them a central treasury to manage it all. As Kwarteng explains, it was a union built on optimism rather than pragmatism. A financial time bomb waiting to explode. And explode it did. By the time 2008 rolled around, the world was drowning in debt. Subprime mortgages in the United States, reckless borrowing in Southern Europe, and an interlinked global banking system meant that when one domino fell, it brought the entire system crashing down. In September of that year, Lehman Brothers, an institution that had survived the Civil War and the Great Depression, collapsed under the weight of its own bad bets, sending shockwaves through markets from Tokyo to New York. Within weeks, credit markets froze, stocks plummeted, and governments scrambled to save what they could. For a moment, it seemed like the entire financial system might simply unravel. The world had entered a new kind of crisis, one where governments and central banks had to conjure trillions out of thin air to prevent economic Armageddon. The age of austerity began, but so did the age of quantitative easing, printing money on a scale that would have seemed unthinkable just a few decades earlier. And behind it all was the same question that has haunted the world since Nixon's fateful decision in 1971. What is money really worth when it's backed by nothing more than promises and debt? As Kwarteng's book shows us, the story of money is a story of cycles, of order and chaos, of gold and paper, of debt and a desperate attempt to control it. The gold standard may be gone, but the struggle to tame the forces of finance is far from over. The real question is, what comes next? Kwasi Kwarteng argues that the true power behind money isn't gold or paper, it's debt. Debt is the engine that has driven empires forward and the anchor that has pulled them down. For centuries, governments have borrowed and spent their way to power, from the Habsburgs, who funded their sprawling European wars with silver from the New World, to modern America, where the national debt has soared into the trillions. But every time, that debt has come due with interest. Think back to the 16th century, when Spain, bloated with silver from the Americas, borrowed relentlessly to fund its war against the Ottomans, the Dutch, and the French. By the late 1500s, Spain had declared bankruptcy 4 times, its vast riches squandered on battlefields and naval fleets. The lesson? Gold can only buy so much time. Debt, however, demands repayment. Since 1945, the US dollar has been the world's reserve currency, a status that has allowed Washington to borrow on a scale unimaginable to previous empires. From the Cold War arms race to the War on Terror, debt has been the hidden hand behind American power. As Kwarteng explains in War and Gold, debt isn't just a financial tool, it's a weapon, one that can just as easily be turned against the hand that wields it. Understanding this history is the first step. Because if the past 500 years have taught us anything, it's that debt never disappears. It just moves. The only question is who gets stuck with the bill when the music stops. So, if you want to know how money really makes the world go round, hit that like button, subscribe, and stay tuned for more. Until next time, keep your eyes on the gold and watch out for the debt.